Welcome back, everybody. Chris J. Snook here. I've got an exciting panel of capital and entrepreneurs today talking about the infrastructure and the core infrastructure that helps ecosystems, early stage or otherwise, scale and become vibrant technology and startup ecosystems. So we'll get a couple different perspectives here. And welcome to the panel, my friend Matt Denning from Eugen Partners. Welcome from New York, New Jersey area, Matt.
Thank you.
And Martin, seems like I just left you a couple hours ago. So Marten Lai from Blue Ocean Digital Management Fund. Welcome to the panel.
Thanks, Chris.
And then I know we've got a couple other guests. Ed Kepler, who is a startup, a cowboy trading company, and Seth will be here from Encore Green Environmental, and we'll get it started with the capital guys. So. For background and everything, Matt, why don't you talk to us a little bit about, Eugen, where you guys are, what kind of appetite you're looking at, what markets you might be looking at, and what role core infrastructure, be it gigabit fiber, be it small restaurants in a town so that people have cool places to go. What are the things that you look for outside of the investments that you make that help you feel good about the market you're investing in and the companies you're investing in?
Sure. Thanks, Chris. And again, appreciate the opportunity to be on the panel. And, I'll keep my comments short and just, fire away with any questions. But we at Eugen Partners, to your point, we're focused. We are a venture capital firm, so we are investors in the space. We're focused on early stage investments, early growth stage investments in companies that are leveraging blockchain technology. Although we're excited about a lot of what's going on in the industry, our focus from an investment standpoint is more on enterprise blockchain solutions, so more B2B solutions. And so when we think about infrastructure, obviously that word can be tied into many areas, but we get excited about some of the core backbones of industries and how blockchain can really help open up opportunities to industries as a whole, quite frankly. And the theme behind blockchain of inclusiveness and value creation, and those that create the value are able to capture more of that value. Having shifts in infrastructure that allow for that are definitely things that excite us. I will say that as we think about blockchain, obviously this is an industry where you have this ideologue, this revolutionary dream, which many talk about, which most talk about. And again, we're excited about the future that blockchain can enable. But for us, we focus more on the evolutionary path to get there. And we think that as investors, from the ability to monetize, to help industries grow sequentially, it's really that evolutionary story that really piques our interest. And so when we think about just the core building blocks of blockchain, we think of things like audit and settlement, things that are sleepy, things that aren't sexy perhaps, and yet there are real needs in industries in order to help them grow and to, hopefully eventually get to the revolutionary dream that we hope for. I will say that at times it's frustrating for us as investors where, we feel like things are just getting too confusing. Things are getting too complicated, unnecessarily. And it's really hindering the growth of kind of the core blockchain application. And, again, it's kind of one step at a time. I was talking with a buddy of mine the other day, and we talk about infrastructure. We're excited about infrastructure in the energy space, supply chain, ag space, but in the financial space, which is an area I've been in for the past 20 years, I'm intimately aware of problems with settlements and reconciliation and the like. And this is a company that my buddy works at, a former colleague, where they're still reconciling, so it's not a blockchain-enabled solution. But they've scaled almost 20 million in revenues within a few years on a solution which, quite frankly, I don't even think should exist because blockchain should supplant it. But this evolutionary story resonates. And so sometimes when we complicate things with governance and reward and fully decentralized, and how can we make this perfect utopian system work, it overly complicates it in our mind. And so if we came in with a much more evolutionary approach, I think we could more quickly scale to some of these industries that clearly have needs that are starving for answers. And so again, we're excited about a lot of what's going on in the space. I'll leave it at that.
What industry specifically is that solution in? Can you give us a little bit
Well,
more color around that?
Yeah, sure. So that's simply in the financials, in the settlement space. And so if we think about settlements and reconciliation of stock trading, that system works fairly well. We know it could be better. If we think of a T+2, a 2-day settlement period for stocks, it's kind of head scratching why it doesn't occur instantaneously or same day, and some things do. But a lot of the industry, a lot of the OTC market, the derivatives market, a lot of the debt market, high yield debt market, the leveraged loan market. I mean, these have settlement periods of many days to upwards of 30 to 50 days in Europe in leveraged loans, for example, and it's industry standard. It's not like an exception took 30 days to settle a European, leveraged loan. Perhaps it's just expected at times to gather the paperwork and to transfer the ownership. I mean, these are industries that would have monumental shifts forward if we could solve some of their problems, and we can. But again, I think that sometimes we may have that solution and then say, hey, and if you participate, we're going to give you this token and that token, and we have to publish some information to a database, to something that gets distributed to anybody in the world who wants to participate. That can hinder the story at times unnecessarily in our minds. Again, maybe 10, 20 years from now, that story materializes, and we can't wait for that. But in the interim, I'd love to see a little bit more success. A heck of a lot more success than what we've had in the blockchain space, because this is a solution which is better.
It's a good segue or juxtaposition to the different forms of infrastructure we could talk about, right? So on the one side, we have technology infrastructure that is legacy, systems that are centralized or maybe not as efficient, and then the decentralized utopia that we are too many leaps from, and that maybe 20 or 30 years out, very adoptable is how I heard you, but there's got to be an incremental enterprise step in the middle that allows for a smooth transition from where we are to where we want to be, and yet at the same time is powerful and has orders of magnitude more efficiency. Otherwise, it doesn't make a difference. So what I heard you say is that, these elegant architectures of what we think trade settlements at 0 hour should look like aren't wrong, but there's a step in between, and the enterprise world needs it to be a little bit more of a step than a leap. Similarly, you could look at physical infrastructure that way too, right? Everybody wants to be the next Silicon Valley, and yet it took 40 years, 50 years for that to get where it is, and it's not necessary either. What's the elegant solution to a Laramie or to, any town that has momentum to say, look, we don't have high rises, we don't have 50,000 homes on every corner, but we do have some really cool things, and here's how we can make those things incrementally better and onboard more people to it, right? Whether they be people coming to start their companies or people that are already here scaling their companies. So Marten, what are your thoughts on that? Take an angle that you want. We've got Kyle Wiley in. I see Ed's in now, so we'll bang around. We're still waiting on Seth. But Marten, what are your thoughts on infrastructure from either the enterprise side, like technology going down the path of Matt, if you have any comments on his, or some other form?
Yeah, I think at a high level, it needs to be talent. There needs to be a good talent pool, and what I mean by that is a talent pool where, from kind of each respective participant in the ecosystem, needs to kind of cluster together to create a pretty dynamic environment. And so it's a combination of talent coming from not only entrepreneurs, but also from capital providers, as well as just everyone else in a participant. So talent, great restaurants, as you mentioned too, Chris. I think it needs to be a cluster, and that needs to be a bit more robust. And I think as a community kind of expands out, then more clusters will kind of form. But Oftentimes I think we focus too much on maybe like one big thing, um, such as laying fiber optics, and we just keep laying more fiber optics, and we forget that there's a lot of other dynamism that needs to happen. And so I think, I know that's a very vague answer, but I think there needs to be a lot of dynamism because there needs to be a lot of nimbleness to an economy, and that's kind of what I think from an infrastructure needs to be promoted. That's kind of a short answer.
How much of the decision criteria for either one of you, Matt or Martin, how much of that you need to be in place, right? So you could look at it from your lens, Matt, as far as here's where an industry like um, settlements and financial services is, and here's where the current blockchain solution is or is not. Are we going to be early? Are we going to be on time? Are we going to go in here later? Like how much of the what's currently there or not there impacts whether you write a check or not? Martin, similarly, how much talent needs to be around the thing before you feel comfortable in, or do you have other hacks for investing in the company and then finding other ways to solve that gap if the market that company's based in needs to be more distributed or is not ready? How does it impact your investment judgment?
Well, on our side, I mean, we take a very concentrated approach to investing. We need to have a working product, and ideally, it's not just an innovations group at XYZ company that's signed on to a pilot or the like, right? It's actually a company that the C-suite is engaged and excited about that technology and starting to roll it out, and that can be very difficult to to distinguish the two, whether a company is just messing around with a few dollars on the side and wants to tell everyone that they're using blockchain so they can come across as being cutting edge, or is there really buy-in at the company that we do need to switch something? So that's a challenge for us to identify.
Yeah. How about you, Martin?
Can you repeat the question one more time, Chris?
Yeah. What's the decision criteria on some of these things? So we'll lump them all into the notion of core infrastructure. So we could look at that as
I think
the industry itself, the market itself, the team itself. How much does it weigh in, or how much does it impact positively or negatively your check stroke? Very specifically. How do you make the decision to invest or mitigate the risk in an area where maybe you don't have enough talent, to use your point?
Well, I think one mitigation now that we've seen with the whole pandemic is that I should maybe taking one step back. I think one critical piece now that I've seen is the access to internet and good internet, right? And I think in places where you might not have that great access, then you're significantly limited. Especially, this seems like the new normal. I don't think we're reverting back to normalcy as maybe some people want to claim. And so I think now the landscape has changed in terms of what essential infrastructure is, and I think there's a very predominant emphasis moving forward on just internet because that's going to create that connectivity. And I think going back to my point on clusters, I think the cluster now is going to be a lot more digital. What type of infrastructure platforms such as Zoom do these founders like? Is it Google Hangouts? Kind of what's their choice? And so from an infrastructure play, I think if there's a lack there, then it's hard to get comfortable around like how are they actually going to like start building product, communicating and collaborating. And so if that is not there, I guess is the question in Laramie, how am I mitigating some of that risk?
Yeah, I think you answer. You're looking at what is there, what are the digital hacks that you can choose, and then what is ultimately, is it a gut level thing? Is there a specific metric that you have that tips you over as far as investing at that time or not?
I think one risk mitigant for kind of maybe any infrastructure play is the ability for the founder to raise capital and hire. And so one kind of soft thing that we do with our founders is we kind of do a little bit of some back channeling and ask some of the employees that they've hired, at least in the kind of the first core 5 maybe, and with the founder, like how how convicted were you to work in the company, just on a scale of 1 to 5? Were you deciding between other offers? How long did it take you to make the decision? Because I think it's really important for one, the CEO to be able to hire someone, and for the CEO to almost confidently tell me that the key person that he wanted for this role, his first choice, he was able to get. And similarly for kind of the first few hires, how easy was it for you to get along with the CEO? How easy was it for you to want to work and join the team? How much hesitancy was there? And I know it's kind of a balancing act, but to me, I think it's just so important that the team is there, they're coordinated, and that they're really united, because I think things change, in a heartbeat, as we can see this year. And I think being nimble is just so important. And as long as they kind of have that core goal of where they want to take the company, and as long as, for us, we believe that what they're building on the blockchain is actually going to provide a real world application, then the space is still so early that it's a bet on the team, essentially. I'll leave it to
Yeah.
anybody else to kind of.
There's a practical answer. So thank you for that. It was kind of into your process a little bit, which was good. So I think it was a good segue. You mentioned clusters. So I'll go to Kyle Wiley, who's senior advisor at DOE Office of Tech Transitions. Hey, Kyle, how are you, buddy?
Good. How are you doing?
Good. So your vantage point's a lot different. You'll talk to us about what that vantage point is. I'll let you introduce that. But as it relates to the notion of clusters and innovation ecosystems, there are infrastructure plays inside the themes that you guys are looking to support, right? You're not a direct investor, but you are an enablement to innovation clusters around the country. So talk to us about your purview on that. Where do you see it? What are the focuses today? What is Epic trying to achieve? Some of the things that we know you're doing. Give us an illumination.
Absolutely. So to touch back on kind of workforce development, though, that's a big thing for us, kind of managing all the tech transfer offices for the 17 national labs. We spend about $18 billion a year on research and development for those national labs. But we've also introduced a program called Energy I-Core, where we're training our scientists at the labs to be more entrepreneurial. So saying, hey, look, is this taxpayer-funded R&D? Can we get a return on that? So we're trying to get them in that thinking mode of this could potentially be commercialized. But yeah, last year we were appropriated $6 million by the Hill, Capitol Hill, to do EPIC, which is Energy Programs for Innovation Clusters. So primarily looking to fund accelerators, incubators, and when we say we're being diverse, we don't just mean giving money to MIT and Stanford across the country. We're really looking to see if we could fund things here in Wyoming, where we're at right now, or different parts of the country like Pennsylvania, Ohio, touching down into Texas, and then all the way up to Idaho, where we actually have a national lab that deals a lot with nuclear security. So we are looking to fund those incubators, accelerators, particularly related to Department of Energy Technology and our national labs. So we try and partner with industry, and it's really beneficial, we found, when you have kind of a university, a state entity, and the federal government. When you kind of have that triangle, it makes it very impactful. I know Wyoming has a fund for things like this, where funding innovation ecosystems. But when states themselves are able to partner with the federal government, and particularly with a university, we've really seen a lot of good success.
Yeah, and those are good signals, I would think, for guys like Martin and Matt. Matt, how do you look at that as far as signaling of other participants in the ecosystem that could help your dollars go farther, your development get stickier? Where does that fit into your vantage point? And I'm going to go to Ed and get a startup's perspective on it.
Yeah, I mean, breadth is important, right? Breadth in investor base, breadth in participation. Nobody wants to see concentration risk amongst just one investor or one company utilizing the technology, and yet that's the world of startups and early stage investing, right? You have to start with one. So I'll just leave it in a short answer. We like to see breadth, but sometimes you fish in a pond where they're just, you're not going to see much of that. And you need to, for us, Martin talked about some of his process in identifying companies, but for us, it's the revenue of paying customers that really talk. And sometimes it is only one paying customer, unfortunately, but you believe in the story, you have some confirmation from the one, but you love breath.
Yeah, well, Scott Stornetta, who's your fund partner and obviously a legend in the space, showed that, I think, in his questions the other night on Sandcastle, because I think he asked every team at least one point. So where are revenues right now? So it was indicative that that's one of the metrics you guys track, which is obviously important. Ed, you're a startup founder in Wyoming. What part of Wyoming are you in, Ed?
Well, I'm not currently in Wyoming, but my company is a Wyoming LLC. So I am looking to move there, but currently I'm in Minneapolis, Minnesota.
Excellent. Okay, so we got one, as they say. So what was part of the decision criteria that a startup founder or entrepreneur like yourself was looking at when you consider not only setting up a jurisdiction for different reasons, but also maybe migrating or moving from one market to a market like Wyoming? What are some of the criteria that a startup founder like yourself is looking at related to infrastructure or opportunity?
Well, I have to say Wyoming's done a really good job as far as jurisdictional clarity, and I think that's missing overall right now. And my area of expertise is around asset tokenization, and the fact that Wyoming's kind of leading in that area as far as having, I believe, Teton County or the area around Jackson, the titles are going to be put on the blockchain. There just seems to be a lot of work and a lot of thought that goes into to building out. And of course, the Kraken announcement was exciting in that, to be able to have a bank and not have to fight with your bank in order to get access to banking is an important factor. So those were the things that made me kind of incorporate there and then look at possibly moving there.
Yeah, so it's another big point. I think interested in, Kyle had brought up the different pieces of the puzzle that they know from the DOE OTT side that matter. It's a multifaceted kind of public-private partnership model. From a capital access and an entrepreneur model, Ed, you bring up a good point, which is regulatory certainty and de-risking that at some level of your mind, so that that the investments you're making have a legal ground to stand on, a strong rule of law. And obviously Wyoming has led in that regard, and we're pretty well aware of that. A lot of time's been spent this weekend talking about where they're going next with it. But Medici land governance is a great example in Teton County. And another example of closing the loop, Sandcastle challenge last year, the winner was open index protocol, and Medici land governance is actually built on the open index protocol. And so backing up all of the land records in Teton County on blockchain is a real thing. It's a use case. Martin, how much I don't want it to sound like a rhetorical question. Where do you think legal needs to go next from your standpoint? You've become more immersed in the last couple of days in the regulatory environment and what's happened here. You've seen some of the announcements coming out. Matt, you may have as well. Where do you think blockchain regulatory needs to go next from your standpoint, from a capital provider standpoint, and whether Wyoming has it or not, where should they be looking?
That's a good question, Chris. Give me a second to think about that.
Yeah. And anybody that wants to pick that one up can pick that one up. I don't want to put you on the spot.
Grab that one. I have some thoughts there. I think the biggest thing is
sure.
The accredited investor issue needs to be addressed. The SEC has allowed people that with certifications to be accredited investors. So no, it's no longer just about money, but it's all tied to old testing of being a securities broker. There should be a digital asset investor certification, and that would pretty much open up the market to accredited investors in digital assets. Whatever before is I think irrelevant to the clarity moving forward. So I think that's a big thing that'll open up on the buy side, more people that are able to invest in these security tokens and other assets.
So you're talking specifically around retail or secondary market investors of
Sure.
tokenized assets, right? Right.
Yep. Mm-hmm. We need.
Yeah, I think you know that's go ahead.
I was just going to say, we're going to make all these, if we're going to tokenize everything and put everything on the blockchain, but it's still going to be the same, 1% that are going to buy these things. So, at some point, I know it's a federal thing, but I'm not sure if Wyoming can have some sort of accreditation, but I think that would be a big help.
Well, it actually is a interesting point. I think it ties back into something that Matt said at the beginning, loosely, which is, how do you go from here to here without, leaping beyond your ability to actually make it to that next destination? What is that iterative step? And I saw a post the other day, I can't remember where, but it was a bunch of lawyers, and they were talking about, I need to be a blockchain specialist and this and that. And the one lawyer commented and said, that's stupid. Every lawyer is going to be a blockchain specialist because at some point in the next 5 to 10 years, everything will be tokenized. And whether you agree with that or not, the point was this notion of everything that's a atom will be arbitraged in bits or represented and tethered to some form of provenance through bits and immutable ledgers is a likely 10, 15-year reality. Maybe it's a 20-year reality, who knows? And so I think what an interesting step that Wyoming's taken is this year with the Stampede. There's a full law con yesterday with over 9 CLE units, which lawyers have to take. And so when you start to cultivate that next step, simple kind of pragmatic approach to, well, let's provide the environment and also the education in this direction to lawyers from around the country in an efficient way, you start to attract more of those kind of people to the ecosystem, to the awareness of some of these different nuances. And whether it's DAOs or DeFi or all these things that are tough to regulate, you got to be careful and not over-regulate. And at the same time, you got to be, you have to have an approach that makes sense. I think you just have to be in proximity to the content, to the average, to the technologists, to the use cases. And so I think Wyoming's doing a great job in that way. But I agree, we have to be continuing to think about that. Anybody have another thought on that or want to build on that?
Yeah, well, Chris, I guess kind of building into that, right, with that being able to be accredited investor, I think taking it a few steps back, one thing that I've thought about kind of coming out to Laramie was this idea of legislation around maybe identity. I feel like it might be a bit of a reach goal at this point, but it's become such an issue with just old world finance and connecting new world finance on compliance, AML, just KYC. And I think if we're able to come to an agreement legislatively on digital identities and getting states and hopefully the federal government comfortable with it, then I think that opens up the huge opportunity for, I think, a lot more people to start coming online, whether that's through exchanges, through products that are using a lot of what's now blowing up in the decentralized finance space, being able to, borrow against their crypto assets, being able to, invest their crypto assets. And And I think, you know, so much of these financial services companies, financial service products, fintech companies, it's just, they're just so bogged down by compliance. They're spending so much time having to spin up compliance teams. Know your customer. Everybody kind of has that that huge requirement. And, you know, I think from a high level, it's kind of ambiguous. Like, how do we know your customer? Is it physical IDs with a combination of, you know, multi-factor authentication? You know, what's kind of the requirement minimum so that we can have a very clear path forward and be comfortable around these things? And so I think that's one piece of legislation that I would love to see be focused on, because I think that that will open up a lot of opportunity for a myriad of different applications. I'll let anybody else kind of add to that. Or
Matt, that's a yeah. I think Matt might have a perspective on, because that's an enterprise blockchain problem, right, Matt? And you come from that world of institutional fund management, and I mean KYC AML isn't new, but in this world it's become everybody's biggest problem, right? It's the problem no one knows how to solve, but everybody talks about every day. What are your thoughts on that as far as where blockchain play a role?
Yeah, no, I think it's a great opportunity for blockchain to really step in and to prove its worth, in that, you know, data, and what do companies do with data? Obviously, we're all familiar with what's going on the social side and with some of those companies like the Facebook and Googles, but in the financial world, you know, how do companies handle data? Speaking specifically to laws and regulations, there are obviously issues as to where the data could be stored and segregated. And so some of that needs to be parsed out. But companies are realizing, I don't want to handle some of this KYC related information. Can I offload some of it in a way that will free me up to new processes? And, you know, I know you know, Martin, the others have spoken a little bit about the retail side and Ed and what's possible, but on the institutional side, there is a great opportunity here. And part of this, I think, just has to be in the messaging as well. You know, we challenge some of our companies. We say, why are you even talking about blockchain in the beginning of your pitch? Why are you even mentioning the word? Do you need to? Some do, but do you need to? Because, you know, again, just going back to the financial space, the idea of digitally transacting and never handling a piece of paper and settlement, I mean, that already occurs, right? We already digitally trade things. We're just talking about how do we tether some information to a database and secure it in a way that's tamper evident and the like. So I think that if we can get the messaging worked out a little bit better, I think there are some, you know, some regulatory hurdles and the data side of things. And I do think, you know, this data privacy issue could be a huge breakthrough area for blockchain. Yeah. Institutionally, it could be a big breakthrough area.
Yeah, well said. Well, we're at time, guys, and for those watching, please hop over and watch Scott Stornetta's 10 o'clock Mountain Time. For my guests and panelists, thanks for being here, and we'll talk again soon. But thanks, everybody.
All right, take care, guys.
Thank you.